Hey, welcome back, everybody, to Tech Tune Up. I'm your host, Paul Meeks, always brought to you by my friends at Benzinga. And remember the Benzinga Pro Tools. Today's the 12th of August, 2025. And today I am at my office on 40 Wall Street in New York at the home of Freedom Capital Markets. And I'm looking out my cool office window and I see the Statue of Liberty. And being an ex New Yorker, I'm particularly excited because tonight I'm going to go to Yankee Stadium and see the Yankees play for the first time in about 20 years. So, anyway, it's great. Nice to have the Wall Street vibe. Anyway, let's get to all the things that matter in tech land. I think, first of all, this deal with AMD, Nvidia, the Chinese, and the Trump administration is very, very interesting. As you may know, as you may have heard, we are going to give President Trump 15% of the revenues on AI GPUs sold by NVIDIA and AMD to the Chinese in exchange for eliminating export controls. This is very weird. I think it's unprecedented. It's essentially a reverse tariff, if that is such a thing. I will copyright that term and make money off it if need be. But we'll see what happens. I guess the bulls would say, well, if the export controls continued with the Chinese, then NVIDIA and AMD would get zero revenue. Now they're going to get 85% of the revenue. Yes, less the 15% Trump discount. So I guess it's a overall net positive. It could have been worse. But the interesting thing is, will the Trump administration strike similar deals with other privately held and publicly traded companies, not just in the tech sector, but even more broadly? Because if you are on the board of directors of a publicly traded company and you hire and fire the management team, you have one and only one responsibility as a fiduciary, and that is to do what's right by the shareholders. So, this competition, collaboration between these companies and the US government getting involved in geopolitical affairs is very, very odd. We'll see if there's more of it. Next, AppLovin. As you know, it's been one of my favorite stocks. Had a great quarter since the last time we were together. The stock is up big, and they have a big product reveal coming on October 1st. So I think we will see an inflection in the next couple of quarters for AppLovin to not only justify its price today, but probably take that stock higher than its 52-week high, which is about $525 a share. Duolingo is a company that I've talked about here. They had a really interesting quarter. Interesting not only because they beat the numbers and guided for another strong quarter, but as you may know, this is a company that has an app that helps you learn to speak foreign languages. What I was surprised by, and I think it's going to be a really big positive catalyst, which may get me back in the stock, is they're going to use that technology to teach you to do a lot of stuff, get into other vertical industries, well beyond the industry language learning that they already dominate. So this could be another nice upside catalyst for Duolingo. Back to the Trump administration. We cannot avoid him. So Apple and Corning Glass have struck a deal where they're going to collaborate on the manufacture of glass used in iPhones with a new investment here in the United States. And I think all in, Apple has promised over the next 5 years to invest about $600 billion here in America. But I will tell you this, if you are an Apple shareholder, every time you hear one of these announcements, this may be good for America, but it's bad for you because they had perfected a very efficient, very cheap, high quality, high production, Chinese supply chain. And if they can't lever that, the financials of Apple change drastically. Their costs are going to go way up just when the smartphone market is matured and the revenues has slowed way down. So this is bad for Apple. Every one of these announcements to appease our president, if at the end of the day they actually have to manufacture and assemble the entire iPhone bill of materials here in the States, then all of a sudden you're going to be spending several grand for the latest and greatest iPhone built in the USA. Not a good thing. Good for America, bad for Apple shareholders. I took a look this week at the quarterly results of both Snapchat and Pinterest. That's actually PINS on the screen. These companies had disastrous quarters, and I've said it time and time again. Do not overthink it. You want to be in a social media investment? Just hold your nose and buy more Meta at any price. These companies will never, ever, ever compete. Amazon is back in the news. Amazon has announced that they are going to give $1 billion discounts on business for Amazon Web Services for business sold to the US federal government. Why are they doing that? Because they are getting a lot of criticism from their shareholders that Amazon Web Services, their cloud business, is starting to lose a lot of market share to Google Cloud, Oracle Cloud, and Microsoft Azure. So, better or worse, this is a sign of desperation on Amazon's part. Figma, recent IPO, very interesting. Figma is a company that Adobe tried to buy for $20 billion a year or so ago. It went to the altar and it was rejected by regulators on antitrust concerns. Now, with a hot IPO, Figma is now valued at about 3x what Adobe was going to pay for it a year ago. And Adobe was criticizing for overpaying at that time. So it goes to show you that Adobe was very desperate. And the problem is Adobe has a product suite, which is one size fits all. And what's happened with these design tools, particularly with younger customers, is they don't want to be forced to pay big numbers for the full product suite. They want to make some ad hoc purchases. So it goes to show you how hot Figma is and how desperate Adobe, which is actually a tech titan going all the way back to the 1980s in Silicon Valley, may be. Supermicro is next on the list. They had a shitty quarter. Supermicro is a company that cannot be trusted. They've been embroiled in not one, but two financial accounting scandals. And in each case, the CFO fell on the sword and the CEO and the founder, Charles Liang, remained. As long as that dude is the CEO of the company, stay away, regardless of how cheap that stock appears to be compared to its competitors, Hewlett-Packard Enterprises and Dell. ServiceNow, this is interesting to me. ServiceNow is the one enterprise resource planning company blast from the past that I think actually has some AI game. They actually had a decent quarter, much better than some of their peers, but the stock still sold off. So I've been away from ServiceNow for a while, but because I think it might be unfairly persecuted at this point, the stock is down enough that it may get me interested in getting back in. Ticker symbol NOW. Shopify had a great quarter. What does that tell me? That tells me that e-tailing is in pretty good shape. And also in Amazon's most recent quarterly announcement, whereas Amazon Web Services revenue growth at only 18% year to year surprised negatively Wall Street analysts that cover that business, their e-tail business ended up being much better than expected. Also echoed by the great results over at Shopify. So that looks kind of interesting. Lyft, I had on my list as a potential comeback story right? The poor man's way to buy Uber, because Uber's always been on my list. It's been a stock that's done great for all of us here that follow the show. But Lyft had a pretty shitty quarter. Again, hold your nose, buy some more Uber, even at the valuation premium over Lyft, if you are interested in getting after particularly autonomous driving. I think at some point, despite the fact that Elon Musk says never, 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 I think at some point, if Tesla wants to be successful rolling out their robo-taxi service and autonomous driving, they have to do a deal with Uber. And it'll be very good for Uber, and it'll be very good for Tesla. Two companies that I actually made fun of as meme stocks as recently as a year or two ago had great quarters, and maybe they got some gain. We got Reddit and Roblox. Never thought I would say it. They're actually looking pretty good. Next, I've poo-pooed for a long time analog semiconductor companies. These are companies in which their chips are mostly found in industrial applications such as automobiles. We had pretty poor results a couple of weeks ago from Texas Instruments. Same thing recently with ON Semiconductor. Same thing recently with the quarter and guide for Microchip, and those are three of the key analog plays. Now, ON is actually up today, a little bit of a perhaps dead cat bounce, as we call it on Wall Street, but stay away from analog semis. Amazon, I've already mentioned, it's kind of a tale of two cities. You got a pretty good e-tailing business, and that was also echoed in Shopify's results, but they are losing share and gobs of it to Microsoft Azure, Google Cloud, and Oracle Cloud in Amazon Web Services. Arista Networks is a stock that has been on my list. I only sold it, as you may recall, a couple of months back, just because the stock had done its thing. It got to be pretty expensive, but they're showing some real acceleration in revenue growth. And of course, their data networking products are key in the build out of these AI data centers. And so I wouldn't buy it today after its big move. But if Arista Networks has a dip, you'll probably see me get back in, and I'll tell you right here on the program. Intel, I think, is an absolute joke. This is so weird, this scenario. So first of all, you have the CEO of the company who wants to double down with his investment in the company's foundry business, outsourced manufacturing business. Then you have the chairman of the company's board of directors who wants to spin that off and sell it to Taiwan Semiconductor or another one of the peers. And so we don't know what's happening between the chairman of the board of directors and the CEO. And then on top of that, Trump badmouths the CEO the other day, saying he should be fired. And then this guy does what everybody wants to do when they want to kiss the ass of the president. They go to kowtow to Washington, D.C. And this is just yesterday. The CEO comes out of a meeting, and Trump thinks he's the greatest thing since sliced bread, after he was just badmouthing this guy 15 minutes ago. The story at Intel is so weird. And I will tell you this, don't buy that stock. Regardless of what happens with their foundry business, if they make a good decision or a bad decision, at the end of the day, I think it's too late for this company. So if the stock has a spike on any kind of weird Trump news, I'd probably sell it. Maybe I'd even short sell the stock. But this is unfortunately a company that I don't think ever comes back. Micron, another semiconductor company that I like. This actually has been on my list for years, as you may recall. These guys are one of the three major players in the world in high bandwidth memory, HBM chips, for AI memory applications. They did something quite odd yesterday. They pre-announced that their revenue guidance they had given for this quarter is too low. So they pre-announced an upside surprise. Usually when companies pre-announce, unfortunately, it's in the other direction. So a very nice upside surprise from Micron. It's telling you whether it's Samsung, Micron, or the number one player in high bandwidth memory, the South Korean SK Hynix, that business is going great. Any chip that any three of those companies can manufacture will be sold. Voracious demand for those chips. I am very interested in what CoreWeave has to say because they are going to announce their quarter tonight, and I will report on it next week. You may recall I got invested in this thing when it was a private company. The IPO comes at 40 at the end of March 2025, and now the stock is up about 300% since then. It'll be very interesting to see what they say. I think what they do is I think that they crush analysts' expectations on revenue and also guide for greater revenues next quarter. But one of the things that I don't think they'll be able to do is appease the bears and the short sellers that say, Paul, it doesn't matter what kind of revenues this company generates. They're never going to make money with all this spending, very heavy spending, billions and billions of dollars on these AI data centers. We call that profitless prosperity when a company shows rapid revenue growth but never brings it down to the bottom line. So we'll see if they better explain and make us all feel better that someday they're going to turn these huge revenues into profits and cash flow. Stay tuned. Well, let's get to some of my tech picks and pans. I've refined my list a little bit, but you can see all the stocks that I like. Haven't been that many changes. Netflix, I told you, I'm still waiting for the stock to drop a little bit to about $1,100 a share. But all the stocks, if you're a tech investor or an aggressive growth investor like me, that I continue to like because I think there's even more upside. AppLovin, Taiwan Semi, Meta, Nvidia, particularly after this deal with the Chinese and the Trump administration. I think now Nvidia probably goes from $180 a share to 200 to 220. So believe it or not, even after its move, I think there's upside. Snowflake will be announcing their results soon. I expect upside surprise. I do like the shift from US to international. So I do own some of the ACWX International ETF. Uber, I talked about. Cadence Design Systems, Robinhood, GE Verona, GE Aerospace, Nebius, which is essentially the European version of CoreWeave here in the States, Microsoft, Oracle, Boeing, TE Connectivity, ticker TEL. Those are all stocks with, I guess, the only one, Netflix, waiting for it to come in a little bit more before I get more aggressive. That's why it's marked here in yellow, which is on my hold list. So let's finish up with some tech trends. So the Fed had a meeting. It came and went. And probably no surprise, the Fed again did nothing with interest rates. But I will tell you, it's happening. It's 100%. It's a foregone conclusion that the Fed will lower its benchmark rate by 25 basis points or 0.25% when they next meet on September 17th. And that'll be the first rate cut in 2025. And also the first rate cut since President Trump was elected. What happened is, even though there's still some puts and takes and not a very clear picture as of yet on inflation, we do have some very dire, negative, recessionary, scary employment data that came out last week. And I think that's going to put the Fed over the top and have them finally give the president what he wants, lower interest rates. I think it's very interesting what I've seen, and this is part of the geopolitical madness, which is the Trump administration. We've had a couple of deals announced, no surprise, as per export controls and also as per tariffs. But one of the things that's might have come under the radar is the deal that we have been striking, because there's been two, with the South Koreans. Samsung, the major consumer electronics and semiconductor company, will be building in Texas Tesla's AI 6 chip, which will power not only Tesla, but some of its other products. And this is interesting because Tesla closed its Dojo supercomputer effort, which at one time had a lot of momentum behind it, in order to get into cahoots with Samsung. Very, very interesting. Of course, anything that Elon Musk does is always big and bold. But then we also have a company called Marvell, which is one of those US analog semiconductor companies that has announced a kind of a part cooperation, part collaboration deal with a South Korean semiconductor company. So you're seeing some interesting play amidst all of this geopolitical madness between the US and South Korea. The next thing is very interesting to me. Apple and another bunch of companies are trying to migrate their supply chain to India to avoid tariffs. However, as soon as they commit to going to India, Trump has put India in its crosshairs. And now, are they going to have any kind of benefit from moving their supply chain with a lot of work to do so from China to India? Because now India has a 50% tariff of its own. It's very interesting how Trump very quickly, in a matter of weeks, essentially put India under the bus. So we'll see what happens. Again, that's why I think that the market might be expensive. I'm not aggressively putting too much capital work because I still don't think we have seen the full impact of all these export controls on and off and all of these tariffs on and off. And so I'm not as bullish as others may be. I'm not as confident as I need to be more bullish. And so that's also with the tariffs uncertainty. We now have another kicking of the can down the road. And so the deal with the Chinese will be negotiated for yet another 90 days. And here's the interesting thing about China. During all of these tariffs, you have to give the president some credit. He very boldly essentially forced all of our trading partners to kowtow to him. And we put pretty aggressive trades. Even the settled trade rates were pretty high. And none of these countries fought back. None of them had their own reciprocal tariffs. And so the interesting thing is, in that respect, Trump got exactly what he wanted. But the reason that the negotiations are so difficult and so time consuming with the Chinese, out of all of our trading partners, it is the one country that can tariff us right back. They will not kowtow. They will not capitulate. And so that's why it's very, very interesting to see what happens at the end of the day between the US and China, because it's not only going to be settling on a tariff rate, it's going to be probably what's going to happen with the US version of TikTok. And also, they'll probably end up delving even deeper into possible export controls with US semiconductors. So TBD, to be determined. But this is one foe that is going to be very, very tough for the US to conquer. We'll see. So with that, if you have any questions, let's take them. All right. Thank you for your question. Palo Alto Networks or CoreWeave? Well, I can't really comment on CoreWeave because we got the biggest of all announcements coming right after the close today. So follow up with me tomorrow, and I'm easily found. If not, I will definitely be talking about CoreWeave, kind of buy more, sell it, or hold it. All those things are in play after tonight's conference call. Palo Alto Networks is getting interesting to me. You know, they had a pretty good quarter, but they scared the shit out of everybody with some of their aggressive deal making, the M&A. And so the stock has come back. So I will tell you this, out of all of the cybersecurity companies, I think that's the one. CrowdStrike sometimes gets a lot of love, but I'm a little bit worried about some aggressive financial accounting there. You saw Fortinet the other day they must have sucked because their stock just got obliterated. So in that space, Palo Alto Networks is the one, but maybe a little bit lower when it finally stabilizes. So anyway, it could be interesting. Paul, any thoughts on CELH? Want to have thoughts a week from today, because I don't know the company well enough to give you any concrete judgment. Any update on CPRX? Yeah, CPRX has disappointed me. It actually might be a better buy at some point. The stock got whacked. It's kind of breathed a little bit of life back into it. I'm continuing to watch it. I did nothing with my original position. I hold it. The temptation was when the stock dipped to add to it, but I'm just holding it for now. There's a couple of things that are to be decided. Like one of the things when you deal with biotech companies, right, you have to have a very clear pipeline as to the success of their products. And they have 3 different drugs that they hang their hat on. And one of the things you have to worry about is if you have a hot selling drug, what happens when the patent expires and it goes generic? When a high margin drug goes generic, then it also has a low margin. So I don't think that we have one of those, what we call patent cliffs in the industry. But in the meantime, I would just hold CPRX. Any thoughts on CRM? The only company in enterprise resource planning software that I like is ServiceNow, because I think they're way ahead of Salesforce.com on AI. And of course, the other one is Oracle. Not necessarily for its own AI products, but the fact that it has Oracle Cloud. So it benefits from the AI boom by essentially offering its infrastructure, just like Amazon Web Services, just like Google Cloud, and just like Microsoft Azure. So don't like Salesforce.com. It's, for me, going to be ServiceNow or Oracle on a dip. What do you think of APLD? Yep, you've asked me a couple of times. It's interesting to me that the stock has been so volatile. It's not on my buy list, but I know enough about the fundamental of the company that I just hold it here. Anyway, guys, that seems to be the end of the questions. I will follow up on that one stock for next week. I'll have lots to share, particularly the excitement that is going to be CoreWeave in a few hours. And always, please like me. Please subscribe to me. Please support our buddies at Benzinga. And we'll see you next week.